Hello to those of you who've logged into the webinar already. Thank you for joining us today. If you could just hold on for a couple of minutes, the webinar will begin very shortly. Thank you. Good afternoon from our London office here at Integer Research. Thank you all for joining us today. My name is Catherine Eveland, and for those of you who don't know, I am the Senior Marketing Executive for our Wire and Cable research team here. I will shortly be handing over the mic to my esteemed colleague and our director, Phil Radbourne, who will be taking you through our commentary and answering some questions on Prysmian's acquisition of General Cable. But before I do, I want to point out a few things in your console viewer. Below the slides, you should see a Q&A box where you can enter in any questions throughout the webinar. These are anonymous, and we'll have some time at the end for Phil to answer these questions. If we do run out of time, don't worry, we will follow up with you all individually and shortly after the webinar ends. On the right hand of the slides, you'll find some more information on your presenter, Phil, today, as well as some contact details, a toggle for the volume control, and more information and links to our website. You can also minimize and adjust the size of any of the windows in the console. If you experience any technical issues during the webinar, please do let us know using the Q&A box. Or if that's not working, you can always email us at publications@integer-research.com, and I will try to sort those out as quickly as possible. We will also send a link to the recording via email after the webinar ends, and if you would like to receive the slides in PDF format as well, please do let us know, and we will get those over to you. That's it for me for now, and here is your presenter, Philip Radbourne.
Thank you very much, Katie, for that introduction. Good afternoon, everyone, or good evening to those of you in Europe or those who are still up in Asia. I think Katie might have mentioned we've got a lot of people dialing in. We've got a lot of our subscribers as well. So we'll, if you have follow-up questions to our subscribers, obviously we'll be happy to answer questions. So we're going to run through about 8 or 9 slides. We're going to look at the impact of obviously Prysmian's acquisition of General Cable. We'll start at kind of 50,000 feet, looking at the kind of an overview of the industry and just see the impact of the merger, and then we'll drill in on kind of the geographic segments and also just have a quick discussion on why we think Prysmian has actually taken over General Cable. Had a lot of people chatting to us over the last couple of days about have they paid the right price, have they paid too much. That's something we're not going to cover here, not really our scope, but if you take it offline, we might give you some more background, but we're certainly going to get into a discussion of, was it too cheap, was it too expensive, etc. But we'll go through some of the, at the end of the presentation, 1 or 2 indicators. Right, so we'll just have a look at the first slide. This is actually the top 50 cable makers in 2016. We've obviously we can look at the quarterly results that have come out through 2017. But these are the known results for 2016, so we'll just start off with what we actually know. You can see in red at the far left of the slide, that is actually Prysmian's insulated wire and cable revenues. We've converted them into US dollars. Obviously, they report in euros, and obviously then General Cable. So you can just see both companies were in the top 10. Obviously, Prysmian just beating out Nexans in 2016. And obviously, you'll know Southwire, the leading US cable producer, and SEI is actually Sumitomo. And actually, interestingly, one of the other companies that's in the top 10 is Hengtong, and they were actually involved in the bidding. How seriously is another question, but certainly Hengtong, they're now well established as one of the top 10 cable makers, obviously with their operations in China and their acquisition of Aberdare in South Africa. And actually, they also have some, through Aberdare, have operations in Spain and other parts of that region. So that's just giving you an idea of the situation in 2016. We're just going to show you the next slide, which is just a kind of pro forma combined revenues. We can just see here. I think Prysmian has actually been revealing in various releases what their combined revenues are, but this is actually the insulated cable revenues. It's just slightly north of 11 billion in 2016. The point is that both Prysmian and General Cable, obviously they make insulated wire and cable, but for example, Prysmian also has optical fibre and maybe downstream harness operations and other associated engineering or construction businesses. And General Cable is also supplying, for example, has a rod business and they sell it externally. So just gives you an example of, this is actually the integer calculations of their insulated cable revenues. And that's where when we look at the market share, the total numbers later in the presentation, that's what we're looking at. So let's just go on to the next slide. And this is actually the footprint of the two companies. And it's quite interesting to see that obviously Prysmian is the leading producer in the EMEA region. You can see on the left EMEA, and that's Europe and the Middle East. They're the leading producer, obviously having acquired Dracker back in 2011. They created, well, obviously the largest cable maker in the world, but had a large market share across Europe. I think the main or most significant thing here really is actually the concentration of General Cable's North America operations. So we've got more than 15 or 16 cable factories in North America versus Prysmian's got 9. So it just gives you some idea that through the acquisition, it's it's an interesting synergy. If maybe Dracker and Prysmian, you look back, you can see that they were potentially overlapping in certain areas. But here, actually, there's a nice fit. And as we see later in the presentation, globally with the global upturn in the kind of the G7 countries, actually North America's picking up, and actually Eurozone, and we expect to see stronger business next year in Europe. You can actually see there are some nice synergies in the acquisition. I think the other thing that we should say is, if you go back maybe 4 or 5 years, you would have seen a greater footprint of General Cable in Asia Pacific. You can see that they've offloaded their Thai operations and were shutting down or selling their Indian operations, and so also kind of offloading some of their operations in North Africa. In Egypt and Algeria, which we won't get into detail, but obviously they're not included in this. But that was obviously some of the issues with General Cable having acquired these businesses or set up new factories and then having to shut them or sell them and writing off those losses. So actually, what we're looking at really in this acquisition, which is quite interesting, is a core business which is very solid and actually in areas that are actually right now showing strong growth prospects over the next couple of years. So that's kind of one of our views here. If we just go to the next slide, this is actually data released, I think, from Bloomberg Analysis. This is actually the percentage shares. We'll just show you the combined revenues now. So this is actually the 2016, the actual reported data. If we look at EMEA, you can just see obviously Prysmian north of $5 billion in that region, and General Cable adding about 900 million. I can't look in detail at the numbers. I think the main thing there you can see is actually the increase in North American revenues. So some interesting operations. They have kind of cable factories across the states, from kind of Kentucky, Illinois, Massachusetts, Tennessee, etc., and even some kind of specialist data cable or tray cable operations in Connecticut and Rhode Island, the kind of historic area around New England for cable making. So again, quite an interesting footprint. I guess the other thing that's interesting, obviously, Prysmian has a solid footprint in Brazil, has Sorocaba and a number of factories there. Obviously, Brazil has been struggling, but again, we're starting to see, or potentially seeing, a turn in the Brazilian market. And actually, General Cable has interesting operations in Latin America. Some of those acquired through the PDIC acquisition and others that were independently part of General Cable before that. So you've actually got a nice footprint there in Latin America with the kind of Colombia operations of General Cable adding into the Brazilian operation. So again, that's an interesting fit. And again, I guess it just shows you, if you look to the far right of the slide, that blue is Prysmian, and obviously General Cable had either sold off or basically exited that region before the actual sale. And as it happens right now, one of the things that's kind of, you would imagine is having an impact on the share prices. How is the business? How are volumes? What's the future business going to be? And that's obviously what the share price is meant to reflect, is estimates of future earnings. And General Cable right now, having sold off and written off the losses before the acquisition, this is the kind of interesting business that they're acquiring. And again, obviously, if you want to contact us, we obviously have plant-by-plant information, but what each factory is making and our estimates and benchmarking, which obviously our subscribers see, and we can chat to you about in detail in the Q&A, or we'll follow up. We've got more than 150 of you actually live now in our attendee list, and about 300 registered. So there's obviously going to be a lot of you asking questions. So we'll obviously try and get through those questions that are coming through. So if we just go to the next slide, this just shows you, I've just combined the historic revenues. This is kind of obviously pro forma, and obviously if you look at General Cable, they've actually been, the top line in grey, you can see that in dollar terms there's a combination there of selling off their operations and actually lower volumes and a weaker copper price through 2016. Obviously, we're seeing that now pick up. You can actually see General Cable's numbers through Q1, Q2, and Q3 with their core operations. And obviously, I'll show you the next slide. We'll just see that kind of the pick up. But you can see that this is the combined revenues of General Cable and Prysmian. So you can just see the main thing is the industry and metal prices, etc. Meaning that both companies, in terms of revenue, are actually in a decline. But obviously, through 2017, we've seen higher copper prices and higher volumes, and kind of a healthier business. I think this is actually showing you some estimates we've done for 2017. What are we seeing here? This is the size of the total cable industry. So it's kind of heading slightly north of. Heading to about 200, just below 200 billion. And you can just see that if General Cable had actually if Prysmian had acquired General Cable back in 2011, with all those businesses obviously subsequently sold off, Prysmian would have had about 8 to 9% market share. But obviously General Cable's been shedding those businesses, shutting them down, and actually through the acquisition they get about a 6% global market share. So it just shows you the industry is still fragmented, even with Prysmian being, clearly the largest, will be the largest cable company in the world. They still only have a 6% market share. We have about 14,000 cable makers in the world. 8,000 are in China, and obviously we're going to see those 8,000 in China consolidate down to about 3,000. And obviously the footprint outside China. About 5,000-6,000 cable companies, and obviously in that case, outside China, Prysmian has a much more solid footing. So it depends on in terms of concentration what you're looking at, but at a global level, it's about 6%. A bit of text here. So just what has Prysmian purchased? Obviously, General Cable's got more than 12,000 employees. and I think we mentioned their cable revenues about $3.5 billion in 2016. It's a great company and very, very good people, and it's got good cable operations in the States. It's got back to its core business in Latin America, Colombia, and in Europe it's got CLEC, and it's got Nordenham in Germany, and obviously the operations in Spain around Barcelona. So again, some interesting operations. I guess one of the questions people have been asking us was, so what happened? What happened with General Cable? Why did it get into the position it was? I guess we would say maybe the General Cable struggled to recover from the global financial crisis, particularly in the States. If you go back 10, 15 years, lots of suburban areas, lots of housing was going in, and that needed lots of power cable, and that was one of the core areas for General Cable. And that once the recession hit, that market hasn't really come back as the strength that it had before the recession. A lot of investment going into kind of urban areas. And then also, if we look back historically, General Cable went and bought the acquisition of PDIC, obviously problematic. That's well reported, and the problems there. But also, there are a lot of operations were acquired in certain regions, Algeria, Egypt, and India, which they've had to sell off. And people have said to us, maybe sometimes they didn't spend enough time understanding the local market before they got in. If you look at, maybe we could say, some of their peers, the kind of benchmarking and due diligence that some of the other companies, Nexans and Prysmian, do, some of the other leading companies, would they have got into such a repeated problem with so many companies having to be sold off and written off? That's one of the comments that people have been telling us over the last few days. So anyway, now General Cable is now back to its core operations, and they are very solid operations. So one of the points is, we look at some of the numbers. So Prysmian's ended up paying 0.7 times the enterprise value for General Cable, compares to about 0.57 for Draca, and a similar number for about NKT for ABB. So some people are saying, well, why? Some shareholders are saying they think General Cable's been sold too cheaply, and others are saying, well, why has Prysmian paid so much? Well, that's not for us to judge. We're just looking at the market numbers, but this is just some of the data. I think the point is that General Cable was put on sale last June, July. And I think one of the points that we're making here in this final slide, this is the global PMI. This is basically kind of the global manufacturing sector. And you can see that there's this kind of a historic turning point for us in the UK. We had the Brexit vote just at the bottom of the market. And you can actually see basically June, July last year, the market just started to recover at a global level. There are all sorts of reasons for that, but obviously we mainly think it was the much weaker oil prices which gave the G7 this kind of tax cut, and that eventually starts feeding through to greater orders and fixed investment, excluding Saudi Arabia and the Middle East. Obviously that's the area right now that's struggling, but you can actually see that red line. You can even see that with companies like Caterpillar that show the same reflection, which is kind of a leading indicator for construction, which then leads through to cable demand and fixed investment. So obviously if you'd bought General Cable at that point last year, before the market had started turning, it would have been a lower price. And I think what we're seeing today is that there's a reflection that there is growth, strong Eurozone growth, which will feed through to stronger demand for cable next year. And we're seeing the same stronger numbers in the States. Potentially some uncertainty with the kind of the tax bills that are coming through. What will that actually mean for growth and stimulus? That creates some uncertainty. But aside from that tax bill in the US economy had been starting to recover very strongly, and fixed investment kicking in. Plus, we're also seeing another trend, which is data centers. An individual data center can cost $1 billion, and within that there can be $80 million worth of fiber optic cable, and actually $50 to $60 million worth of power cable. So again, some of these markets with these big data centers going in, with more and more 5G and cloud computing, that would all drive power cable demand and the businesses and the cable industry. So there we go. So that's kind of our quick summary of the acquisition. We're quite happy to then go through to some questions.
Hi, everyone. While Phil has looked through some of your questions, there are a lot. We just want to have a good look through. And I don't know if we'll be able to make it to every single one, but we'll try our best. As I said earlier, don't worry if we don't make it to your question. We will answer them individually after the webinar. While this is going on, I just wanted to give you guys a little overview of our products. As you know, we track the global insulated wire and cable industry in detail. Our current products include our plant databases, which provide production data and locations for nearly 3,000 cable production plants across 95 countries. This data is split by cable type, plant, and parent company, and all of these products are available online. We have a subscription service called the Wire and Cable Data Service, which offers biannual updates of our data sets and monthly newsletters from the editor tracking supply and demand for energy cable, data cable, and enameled wire across 80 countries. And this also provides 5-year forecasts for consumption, production, and trade. We also produce focus reports, such as our Market for Specialty Cable, which covers demand and production for 6 key end-use markets for specialty power cable. And we have recently produced a new report on global power cable supply. This comprehensive report provides coverage of all HV, EHV, and submarine DC power cable production plants across the world. This is line-by-line detail of each plant, how many lines, what the line design is, who is the supplier, and where are they located. There is far more detail on all of these products on our website, www.integer-research.com/cable. Also, if you're looking for tailored research, Integer can help. We offer independent, confidential consultancy services to businesses looking to succeed in their respected industry. Some of our previous work includes carrying out numerous consulting assignments for leading global cable producers across a range of product sectors, including Saudi Arabia, the UAE, Qatar, Japan, Germany, France, Italy, the US, South Korea, and many more countries. And finally, I hope to see you at our very first Advanced Cable North America Conference. This is being held in Atlanta, Georgia, next February 2018 from the 26th to the 28th. The 3-day event will kick off with a welcome ceremony held at the beautiful Georgia Aquarium and leads into 2 full days of networking and discussions from leading policy and market experts from across the industry. We hope to see you there. We still have one last early booking discount available, but this ends on the 19th of January. Great. I believe it's time to give it back to Phil. Thank you again for listening, and here he is.
Thanks, Katie. Right, so we're just going through some of the questions. I think there's certainly a number there on why is General Cable sold the business? Well, I think if we go back, there was a why sell? I think if you look back, it's very difficult to say. There's kind of a DNA with companies, but they had acquired. They went on this kind of acquisition phase, expanding outside the core operations, which we're back to now, which are very, very good factories, which are in, and we'll cover that later. People have been asking about the HV business in Europe. They've got some very, very good operations in Europe. There's Selec, there's Nordeman, which is the subsea operations. And obviously the North America operations. But I think the main point is that we've seen previous mergers. We saw Draca and Prysmian, and one of the questions was, why did it sell? So why did it sell? I think they went through, the management bought PDIC, and there have been all sorts of problems there with those operations. We're not going to go into detail about it. You can find that online, and that's all in their reports. But there have been problems with that acquisition. And actually then we also think there was a certain amount of acquisition of operations which they've had to sell off a whole series of factories. And each time they've sold the factory, they had to write off the losses. And it's that it's that experience of not generating profit, but actually having to write off huge amounts of $1 million for each operation. That has meant certainly the shareholders were saying, well, not only is the management not creating that much shareholder value, they were actually destroying shareholder value. You can actually see that in the history, and that is discussed through the notes. You can see the banks and analysts and investors asking that question. There's something about the DNA. There's something about the Prysmians and the Nexans and others that have been able to acquire companies that fit. And I think we're going to see. I think Prysmian have already said that they're going to do other acquisitions. I think the other question was, people asking me a lot of questions about why they were selling, why people are asking about kind of market. Won't the European Commission block the merger? Won't there be conflict issues of concentration in the States? They've shown in Europe really that even with the merger of Prysmian and Dracker in the specialty market, and even with concentration levels up to 60% in certain markets, the EU still allowed that through, and they have shown that the cable industry is now a global market, and it is now quite easy to show that you can, if I'm a purchaser or some of those markets, they can show that Chinese material and Chinese producers will can ship their cable into for HV projects. The question of envy is slightly different. Obviously, there are logistics and cost issues there. But even so, we've seen Southwire in North America has a 25% plus market share. So again, with some of those operations going through and that level of concentration, we don't actually see regulatory issues being a problem. Now, the next question is, people are asking, a lot of people saying which factories are being shut, which is the best factory, will General Cable be, will the brand be kept, will the operations continue? We certainly, if you look at the footprint, we've got 90, Prysmian with the combined Dracker Group has 90 factories in Europe. In the whole EMEA region, it's 95, 100. And General Cable's got, 6-7 factories in Western Europe. So those General Cable factories, the Spanish operations, large operations, will we see consolidation? I'm sure that Prysmian, they've already mentioned some of the savings in terms of procurement, but if you've got these factories across Europe, you're going to look at the footprint and think, what can we shift around? You're always going to do that, and these are very good factories, the General Cable operations in Europe. And obviously CLEC, a very, very good company historically with its H3 operations. So there's some very, very good people there being acquired and very, very good businesses. So if you're going to see a footprint overlap, probably in Europe. We see less overlap actually in North America with the, obviously a lot of the people have been asking us about our numbers. These are insulated cable numbers, so we're not including the fibre plants. So obviously in North America, Prysmian already has Claremont making fibre, and it's got kind of operations making the old Dracker business, Rocky Mount making kind of elevator cables, lift cables, and some other specialist business through Dracker. So apart from that, we've got the Aberville HV business. We don't see. We'll see. The market's picking up. It's a good time to acquire the company, and so there might not be. If they maybe acquired them 5 or 6 years ago, we think there would have been more closures. There were a lot of closures with the Dracker Prysmian merger, and a lot of cost to Prysmian of shutting some of those operations down once some of those agreements to not shut faded. Whereas here, we think it's a very, very interesting fit now that General Cable has sold off some of those troublesome businesses that the previous management had gone through and kind of quite aggressively acquired. And obviously, some people say, well, what other acquisitions or mergers do you anticipate? Well, obviously, the industry is going through this kind of coincidental growth phase. We're seeing very, very strong confidence and leading indicators. The question for us is, how will that feed through to actual demand on the ground? So we're actually seeing lots of projects coming through in the G7. But again, in some other areas, there are still weak patches. So we think it's interesting, and obviously CEO of Prysmian has mentioned some of these acquisitions. We're not going to speculate now. Obviously, we'll chat to our subscribers and give them more views in our upcoming newsletter. But some other people talk about overlap in Latin America. Yes, there is some overlap, but again, the market is starting to recover. Even mining is getting a little bit stronger recovery there. So again, we think it's very interesting. And again, for our subscribers, we can take you through the plant-by-plant data and implications. So again, thank you very much for joining today. We're going to upload the presentation online and the audio, and otherwise we'll send you the PDF of the presentation, and you can always ask us. Yeah, and we'll get in touch with you individually to follow up with your questions as well. So again, have a great day, have a good evening, and please keep in touch. Thank you.